Hello and welcome to the Global View on this Tuesday. I'm Andrew Gagan. Thanks for joining us again here at Ausbiz. Let's get across those market moves overnight. Global investor sentiment remaining positive despite oil prices surging higher as President Trump said the ceasefire with Iran was on life support. Now on Wall Street, US stocks closed slightly higher, the S&P 500 and Nasdaq again reaching record highs as AI optimism and earnings-driven further drives momentum in the market. Now that momentum has prompted Goldman Sachs portfolio strategists to warn that while the baseline outlook remains constructive after the strong momentum rally, we like allocations to defensive low volatility stocks and selective value high dividend yield stocks in order to maintain tech exposures but protect from a sharp momentum reversal. And veteran investor Michael Burry also warning that stocks are likely about to crash. Well, among the stocks to move on Monday, Intel added to its 14% gain on Friday on a report of a preliminary chip-making agreement with Apple, while peer Qualcomm jumped to a record high. Microsoft targeted a $92 billion return from its large early investments in OpenAI. Media company Fox jumping after beating third quarter revenue and profit estimates driven by growth in its streaming service and increased subscriber fees. Among other movers, some airline stocks slipped in rising oil prices, as rising oil prices threatened margins followed. And companies due to report this week include tech networking giant Cisco, semiconductor equipment maker Applied Materials, as well as market heavyweight Nvidia and retail giant Walmart. Well, President Trump says the ceasefire with Iran is on life support. This follows Iran's response to a US proposal to end the war with a demanding compensation for war damage, an end to the US naval blockade, a guarantee of no further attacks, a resumption of Iranian oil sales, and sovereignty over the Strait of Hormuz. Well, President Trump said Iran's response threatened the status of a ceasefire that has been in place since April 7th, saying, "I would call it the weakest right now after reading that piece of garbage they sent us. I didn't even finish reading it." Well, attention now turning to President Trump's trip to China tomorrow and his meeting with Xi Jinping, when the two leaders are expected to discuss Iran, Taiwan, AI and nuclear weapons, as well as extending a critical minerals deal. US Treasury yields have risen after President Trump rejected Iran's response, pushing oil prices higher and fueling concerns about inflation. The US 2-year up to 3.94%, the 10-year at 4.41. Aussie 3-year government bond yields rose to 4.71%. The 10-year is now back above 5%. The US dollar little change. The Aussie has risen to 72.5 US cents. Oil prices surged on signs the Middle East ceasefire is in danger of collapsing, while the Strait of Hormuz remains largely closed. Brent crude futures up around 3.5% to close to $105 a barrel. Gold edging higher at around $4,735 an ounce. Copper was up more than 2.5%. Iron ore up to 114 US a ton. And Bitcoin is currently trading just below 82,000 US dollars. Let's get across those market moves then. Steve Sosnick, Chief Market Strategist at Interactive Brokers, joining us again now. Steve, welcome back to you. All right, so I was just talking about the momentum. We've had some warnings there, perhaps some of the usual suspects warning this is all going to end in tears. What are your thoughts?
Good morning, Andrew. It's funny. The debate really comes down to almost generational lines when I have it. If it's someone who went through the global financial crisis or more importantly, the internet bubble, they're pretty much always saying, oh my gosh, this just reminds me of 2000, all over 99, 2000, all over again. For younger investors who really haven't seen a prolonged downturn, remember, we had a bear market that barely lasted a few months in 2022. We had the COVID bear market, which lasted, a matter of months. I guess technically we might have had a little bit of a bear market, something close to a bear market last April, but that lasted like 2 weeks. So they see every downturn as short, sharp, and a buying opportunity. And so I've actually been having to field questions from both sets of investors. Number one, the older investors saying, boy, convince me this isn't 2000 again. And the younger investors saying, wait a minute, why are all the oldsters saying this is like 2000 all over again? Please explain. And I do have to side with the older folks. Maybe that's just because I'm one of them. But there are some parallels here. that make me a bit nervous, and probably considering the conversation you alluded to at the top with Goldman's portfolio manager and Michael Burry's comments. I think I'm not, my older friends and I and me are not alone on this.
Well, perhaps it was wise, obviously. We draw on wisdom such as your own. So, are you more likely to take a defensive stance right now then?
Yeah, well, this is the one thing here is it's pretty much an impossible tape to fight against. So, I think it's time if you have profits, it's not a bad idea to take them selectively. It's not a bad idea to reduce risk. One of the things we see from, in terms of options pricing is what I'm calling FOMO insurance. One of my friends who's a longtime options expert called me this morning and said that, it's strange that the skews are weird. And without getting too deep in the woods, what skew means the imply that you have an implied volatility for an at money option, and then it's typical over history since 1987 because that's what changed things in this regard. You had a little bit of an excess pricing for downside puts because those could be used for insurance. And so when you graph those out, it looked like an asymmetric smile. Option traders call it the Elvis smile. I'll try to do it. Sort of, and but now it's almost a symmetrical smile, and the reason because people now want insurance on upside. I think you have portfolio managers who are a bit nervous, saying, "Wait a minute, maybe I don't want to jump into the markets at this level, but I have to protect against missing a rally because otherwise there goes my bonus, there goes my job. I'll get angry calls from my investors. What are you guys doing?" So I think what they're doing is rather than jumping in with both feet buying stocks, I think they're using calls in many cases. Now, to be fair, people are jumping in with both feet buying stocks, and we see semiconductor stocks dominating our 10 most active stocks pretty much any given day when I look at the report. But it's tough because this market is a momentum monster right now. It's a tape you can't fight, but it's one that you have to be a little bit wary of chasing.
And then the background of this, of course, Steve, as I mentioned there, that peace process in the Middle East barely has a pulse. The ceasefire is in danger of collapsing. Oil prices are rising again, yet the market has shrugged that off.
And that goes back to my point about this market being a momentum monster. Basically, you and I have discussed this many times. I've always said stocks are really not the place to go when it comes to geopolitics. They often get it wrong, but boy, they have just decided that geopolitics do not matter in the slightest, which is, it does to the extent that you have key inputs like yields and oil, continuing to move higher. But it's a ratchet effect. Anytime there's any sort of positive news, whether or not it's real or whether or not it's sort of bluster, we see stocks rally. We're closer to peace to the Middle East. They're going to be talking, whatever. You get a rally. So far, we're like, for whatever the number is, 25, 50. I don't know how many times it's been promised, but the outcome is zero. And but yet we don't get penalized for the zeros. We get penalized. We rally on any. So I take that more as almost an excuse to rally than a reason to rally. And that again is a sign of a momentum-driven market. As long as you can come up with any rationale for pushing stocks higher, this market will take it. To be fair, semiconductor earnings and tech earnings had generally been quite good. We'll hear from Nvidia this week. But we've gotten good earnings, good guidance, but we're projecting years of good guidance onto some of these stocks when they gave us a quarter of good guidance. So 70% move in the semiconductor index in 6 weeks is telling us something is really weird out there.
Steve, Nvidia, how critical is that results? We're coming up to that in a week or two. Of course, it has beaten every time. Just gets across the line sometimes by quite some margin. If it were to miss, what would the likely effect be?
Well, I've been saying this pretty much every quarter for the last called 3.5 years. And that's not to minimize your question. Nvidia earnings are the most important single earnings during an earnings season because they are the poster child for AI spending. There's no way around it. They got the ball rolling in February of 23, and I remember counting up how many times they mentioned AI in their in their earnings commentary. And man, with 2020 hindsight, I wish I'd just put it all in Nvidia then and walked away from my day job because I'd been very happy. But instead, they have had such a tremendous track record. They have been able to beat and raise pretty much every quarter. I do wonder now. Nvidia, in some ways, has been a bit of an also ran, if I can use that terminology, because it's been lapped by, let's call them your simpler chips or your simpler manufacturers, like an Intel, even Qualcomm, which had sort of been, forgotten about, all of a sudden rallies, 60% in about a week, because no one had looked at this one. Micron. So some of these other names that are doing chips that are not as expensive or complicated as Nvidia have taken some of the glory away. But these guys do have the best handle on hyperscaler spending, and if they're still seeing this money flowing at them faster than they can deploy it, well, by all means, we're gonna see Nvidia doing okay, if not better than okay. If there's even a whiff of weakness, we got a problem.
We shall find out in about 10 days or so. Steve, in the meantime, have a great week. Thanks for joining some Interactive Brokers.
Pleasure as always, Andrew. We'll talk soon. Take care.
We're just over 0.1% higher, so we are expecting a positive. There we go. We are expecting a positive start. Obviously, of the past couple of sessions, which have been down significantly. All eyes will again be on CSL. See if it can stem the bleeding as such, excuse the pun. Other stocks we're getting updates from, including Life 360 today as well. Join us, the Open, just a couple of minutes away.